Thank you. Good evening. Our first committee tonight will be Finance, and it will be presided over by Mr. Ford.
Father God, we come to you tonight, honored to be in a position to represent our community, honored to be in your presence. Lord, so that we are serving our community with the best of intentions, we pray that our thoughts and ideas be within reason, that our work and decisions thereof enrich our community and the stakeholders. Yes. And let our work be within reason and be within your will. Father God, you are welcome here, and I pray this in your name. Amen.
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 Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. The Finance, Insurance, and Section 16 Lands Committee will come to order. Please note in attendance are myself as chairperson, Mr. Don Crowdis as vice chair, and Dr. Louis Cloutier as committee member. Item number 3, consideration of approval on property insurance renewal for 2024-2025. Mr. Curtis Kostrangic is here, and I think, there you go. I think you had a couple of things to go over with that, so we'll go ahead and get that before we do the motion.
Yes, sir. The amount of insurance we would be carrying is the same amount we had last year. Our total coverage would be $35 million. That is for all other perils. That means fire, a tornado out of a spring storm, or anything like that. However, just like in any other property insurance, if there is a named storm, the deductibles change. Then our limits change to only $10 million for a named storm, with a $500,000 total deductible, with 5% per building deductible. But the premium did go down a little over $80,000 from last year.
Okay. Well, let me read the, yeah. The committee recommends that the board approve and accept the renewal offer of property insurance through USI Insurance Services Incorporated, providing 35 million limits per occurrence with a $10 million sublimit for named storms, subject to a $100,000 deductible per occurrence for all perils except for a 5% deductible, subject to $500,000 minimum per occurrence for named storms, effective April 27, 2024, with an annual premium of $1,917,182.25. Moved by Mr. Crowdis, second by Dr. Cloutier. Any public comment on this? Mr. Crowdis? Dr. Cloutier?
Yeah, I have a question. As we learned from Ida, obviously the 10 million sublimit for named storms is not sufficient. What does FEMA require us to have in terms of the amount of insurance for them to be able to come in and participate like they're doing now?
There's two things that FEMA require, and I'll have our FEMA guy come up here and kind of explain
Okay.
the more details of it. But you have what's called an obtain and maintain amount, which has more to do with if FEMA gives you X amount of dollars, you need to obtain that much insurance and maintain it.
Okay.
Also, you have to spend a certain percentage of your budget on your property insurance.
Okay.
Okay, that has to be met. Now, as far as the 10 million was not sufficient for Ida. We would have had to have 200 million.
Right, exactly.
And there comes to a point where you have to say, and that's why we have, when Mr. LaForte gets up here and explains the Stafford Act to you, there's a certain percentage of your budget you spend, and our percentage of our budget is lower than other entities. And that's because the state knows, the federal government knows, we're here to spend our money on kids. So whenever I go out to buy an insurance policy, or I'm spending my money on something, and I see a new vendor, I'm telling them, look, every dollar I give you, I gotta take out of the classroom.
Exactly.
So we try to spend as much as we need to, but as little as we have to. When it comes to Ida, that's a once, I hope,
Yes.
a lifetime thing.
Yes.
Prior to that, the most we ever had in damages that we collected on was about $7 to $8 million, and that was for Hurricane Gustav. Now, we still got FEMA help on that because got help on deductibles and things like that. Currently, we have a $500,000 flood policy on Broadmoor, and that's because we collected a $500,000 in flooding that happened there, but we have to obtain it and maintain it because FEMA grants that came in previously.
Yeah.
So I'm gonna ask Mr. LaForte to explain to you how the Stafford Act works, what
Okay.
we're required to spend, which we're doing more than that, and how reducing that would also be not look good with FEMA on our part.
Right. I guess before you start, just to ask, the root behind my question is obviously, like you said, it takes 200 million to do what we're doing, plus whatever. And I was wondering if the 10 million is what's required by us to participate, or if there's a lower amount. If it's 5 million, then instead of having a 10 million name storm policy, maybe have a 5 million name storm policy. So again, we could save premium knowing,
I understand where you're coming from.
Okay.
The tip, in the years past, we usually fluctuate from 12 to 10 million.
okay,
But I think what Mr. LaForte will explain to you is what will happen
If we don't have-
reduce it
gotcha.
from current coverage.
Thanks.
Doug, it's a very good question. Very good question.
Yeah, and so Curtis kind of explained it pretty well before, but so previously from Gustav, Ike, and Katrina Rita, y'all had about $7 million in claim previously. So y'all have about a $10 million coverage now. After this storm, after we finish payout, y'all will be closer to around $200 million, probably. So without an ICC waiver, which is what he was talking about, which is part of the Stafford Act, is your insurance commissioner's certification process. You would be required to maintain that minimal requirement before FEMA can come pay anything.
And that minimal.
Would be whatever it ends up being, so maybe $200 million,
Ah, okay,
which is not reasonable.
exactly.
So what they have is this ICC waiver, which is part of what he was talking about, that is minimum required of your operating budget that you have to maintain. Right, for education, it is 0.29%. It varies between each division, but that minimum requirement is not supposed to be used as rationale to reduce your insurance if you're already at a reasonable rate. And so if you were to reduce your insurance at this point, after you already know you've exceeded that, it can make you ineligible for the ICC waiver, which would hinder any future claims and would require you to maintain that 200 million, or you're not in compliance with FEMA and the Stafford Act. So pretty much you're kind of stuck, because at 10 million, unless it becomes an unreasonable amount to maintain that. But since y'all been operating at 10 million and it's around the same cost, it does not seem to be any hindrance. Now that may change over the future, but as of now, it's not an unreasonable amount.
All right, all right, thank you for your explanation.
Mr. DeHart?
I got a question for you, Adam.
Mm-hmm.
And I'll follow what Curtis said and you said and explained it, and I understand it better. But I still have a question in my mind that I'd like to see what the answer would be. Right now, they just say Hurricane Ida is the worst hurricane that I've witnessed serving on this board all these years. and understand all of those facts. At the same time, 90%, because Ida was so bad, 90% is reimbursable from FEMA.
That is correct.
And right now, our 10%, that's gonna be a high number, because I know you know the number already about how much you think we have damage already, say 200 million or whatever it is. Now, our portion of that is gonna be, what, 20 million, right?
About 20
If
million.
it's 200 million, it'd be 20 million, right?
And yeah, and then you have to reduce your 10 million you've already had from your insurance from that. So that already is, you're down to 10 million
Yeah.
at that point.
But still, in the first comments was, we try and keep our money for instruction. And right now, we're gonna get hit with at least a 10 million minimum to finish paying for everything, to get everything fixed. Am I correct?
As of now, yes.
About.
Yes, there is also other funding that is available that we are looking into, but that.
Yeah, out of
for
the general
later.
fund on the building fund, correct?
No, other grant programs.
Okay.
That can help supplement. They already have CDBG funds that were supposed to help supplement from the 2020 and 2021 storms.
Yes,
But we just don't know what's available in the future.
right. That's why I keep worrying about, we're gonna run out of money before we finish fixing everything. I'm really concerned about that. It's not about saying running out. We have certain resources, and what you're saying right now makes me feel a little bit relieved on saying some grants or something like that.
Yes.
And the parish, many parishes get some, what I'm gonna say, I call it stimulus money, but the hardening, whatever you wanna call it. And maybe we can qualify for some of that too, right?
Yep.
I was just asking to where I got a clearer picture on what was being presented. Thank you,
No problem.
thank you.
Any other board members? So, yeah, so I did have a question, and Mr. Curtis, I mean, I don't want to speak for you, but one of the things that we talked about before was how, just to clear this up, this $10 million is not just a 10 million from one vendor. It's actually through USI, but it's several different vendors, correct? I have it here in front of me. I don't know if you have it with you.
Yes, sir, let me hand that out.
Okay. So while he's doing that, and I assume it's the same, I'll look at this one just to be sure. The bridge version, okay. So
Thank you, Kurt.
essentially what we're looking at is 2.5 million from National Fire and Marine, 846,200 from Storestone, 5,542,800 from Lloyd's of London, and another 1,111,000 from Lloyd's. And I think collectively, this comes to be around that $10 million mark.
Correct. And what that is those first few are the people who will stand in line should there be a named storm and any damage. So if we only have a named storm and it's $2 million worth of damage, Starstone and Lloyd's are all sitting pretty, they don't have to pay anything else. But if we ever wanted to increase our coverage, Mr. Dave, who's back here, our broker, will have to take our statement of values, which is something I give to him, and we're gonna have to hunt down more layers and say, okay, do you want the 11th million, or do you want the 500,000 after the 11th million? And we have to hunt down people to start taking different layers of this, and then see what our premium is after that. Because as you can see at Starstone, $846,200. Well, that's what they wanted to put at risk. Different carriers have different capacity, meaning we can accept certain amount of risk. They got it down to a science. So you just gotta say, this is how much insurance we got, this is where we're gonna shop it around. We've been with National Fire and Marine for quite some time, also known as Berkshire Hathaway. We have a good contract with them. Lloyd's is always there for us. But once you start hunting, there's a couple things you gotta watch out for. One, what premium they're gonna charge you, and two, what are their ratings? In other words, are they good for the money? And that's another thing you gotta look for. And USI and Mr. Day are very good at getting good carriers who are, I mean, with about in the middle of October, we had $10 million. We had two $5 million checks. But since then, that was 2 layers. Now we got 4 layers. Yeah, 4
Yeah.
layers.
So my follow-up question, my last question is this. because I was having a conversation with some board members from another neighboring private school, and the question was, with the revenue that we have, or with the money we have in our building fund and other various funds, and how much we're paying for deductibles and how much we're paying for premiums, would it be possible for us to self-insure through USI, where we didn't have to have these underwriters, where we put $10 million aside of our own money, because essentially we could save ourselves $700,000, or we'd be spending $700,000, save ourselves $300. Because if we're paying $500,000 for deductible, and then we're paying $2.5 million for premium, that's $3 million right there of the 10 that we're spending, but not without getting a return on. So,
I understand what you're saying, and, we self-insure from medical and things like that. The thing with that is, you gotta go, for instance, let's say $2 million a year, you gotta go 5 years without a storm to have the 10 million. Whereas the 2 million, almost 2 million, gives you that 10 million right away. It's that
Rolling of
age-old
dice,
thing,
huh?
where you wanna roll the dice. Do we wanna roll the dice here and, oh, we're up for 10 million? But the thing is this, is we still have to spend money on a premium to satisfy FEMA's Stafford Act requirements, regardless.
and that's what I wasn't sure. I know when Adam came up and spoke about the Stafford Act,
Yeah, I mean, we
Was
could
that a
go and say, okay,
requirement?
we want a $10 million deductible and put that up. The diocese had a $30 million deductible, but a $50 million policy. Well, that means they had to come up with the first $30 million. So now they're looking for an insurance company because theirs is no longer selling in the state. But any way you cut it, if we're gonna end up dealing with FEMA, we're gonna have to spend at least that portion of our budget and maintain the amount of insurance we've always maintained to ensure that we could deal with FEMA in the future. Hope we never do, but,
but here we are dealing with it right now.
and we're always doing it.
Ms. Benoit?
So, I don't think I was here when we decided to self-insure with for medical.
That's over 30 years ago.
Okay, so when you transition from a policy to self-insured, I'm assuming you just don't automatically do it, that you work yourself into the funds that you need
would
to
the
have
capital
initially
backing up yourself.
to start that process. So, I mean, if we had, I think what Mr. Ford said is a great idea, but again, I appreciate what you said about, the 2.5 million is there to protect you for the 10 million that you might need. But if we want to move in that direction, then I think maybe the board would have to consider putting some money, starting a fund that would build towards getting to that point of self-assured.
And really what you would be doing is funding a higher deductible, because, again, you need to meet the Stafford Act requirements on the premium, which means you still gotta buy an insurance policy. Now, we could massage that and negotiate that different ways with a higher deductible, and you can maybe put that away. But again, when it comes to education, I'm taking 2 million and I'm putting it into insurance, but I'm taking some more money now and I'm putting it in another little lockbox that I can't spend on kids if I need it at the time, or I can't spend it on health insurance if I need it at the time.
So if
That
you,
would be a decision, I'm sorry, I don't mean to interrupt, but it'd be a decision where the board would have to weigh what's more important. Do I want to lock this money away, or have the flexibility to spend it the way I
sure,
want to?
well, I understand that would be a board decision. But the other thing is, would that meet FEMA's requirement if we were self-insured? Or you're saying we still need a policy?
I would probably defer to Mr. LaForte on that question.
Yeah,
That's a good question, too. That's my question.
Yeah.
I don't know that.
If you would do a self-insurance plan, FEMA would have to approve that plan before it can be put in. So you'd have to present it to them, and they would have to give approval before they can okay that.
Okay, do you know that if they've done that for anyone?
I am not aware now,
Okay.
but I don't know if it's possible, but they do say that it's not the most ideal, but if there's a certain case where you can't get insurance and you have to, it is an option, but it has to be approved by them before you can move forward with it.
Okay, thank you.
Got one more question, actually, two more questions. You said this, and I just want to be sure I'm clear in the understanding, is that should we have a named storm, the first $2.5 million payout's going to come from National Fire and Marine,
Yes, sir.
then the next 800,000 plus would come from Starstone.
Yes.
So they're qualifying their amount of risk based on the order in which they would participate.
Correct.
All right. And so, thank you for that clarity. The other thing is, we're talking about hurricanes and storms, but I'm guessing this $1.9 million premium is also paying for that $35 million policy.
Right, if you look at the bottom, there's an additional 25 million from Landmark.
Right.
That kicks in if there's a incident that does not include a named storm.
Okay.
In other words, a spring storm comes in, you have a tornado, or you have a
Inline
fire.
winds, fire,
Correct,
or,
not from a named storm.
right. But I'm saying that, as a board, we need to realize as well that part of that 1.9 million also includes non-named storm damages. We can't
And an
just think
extra
in terms
25
of named
million.
storms.
Yes, sir.
Because, you could have a fire or an inline wind or tornado, or like you said.
Yes.
And then that 2.5 million would come in first.
The 2.5 million would come in first, and the 25 would come in after the 10 million.
Great.
Yes, sir. It's, the 25 is in excess of the 10 million, but it's only good if it's a non-named storm.
Right.
So if, we haven't had a fire in the school since Montague Middle back in, the early 80s or so. So if, God forbid, something like that happened, we're insured up to $35 million for that fire, because it's not a named storm.
And that doesn't matter what building it were to occur at, you have that insurance covering all the buildings.
Yes.
All right.
Well, Ellender's not covered.
Okay.
Any other questions?
I just want to say one thing. If
Sure, go ahead, Mr.
No,
Ozark.
I wanted to recognize again and thank Mr. Ed Digg for the work he does for us. We appreciate you, Mr. Diggle, for all that you do coordinating with Curtis, these carriers that are, coming along board. Yes, sir.
So my name is Ed Daigle. I'm with USI. I just thought I'd mention a couple things. I kind of grab all the papers I've been working on for months on this. Just a little perspective. Your premiums are high. Everybody's premiums are high. Not going to go into that speech. We're all living that in our personal lives. But if I go back quite a number of years on your account, and this particular paper takes me back to 2010 when you were paying $1 million.
Yep.
And it went very quickly, $1 million to $950, $990, $1 million, 905, 796, 769, 806, 872, 998, $1 million. And then in 2022, we felt an increase, right? We all did. And then last year, you had an increase. And this year, we have a very small incremental decrease, admittedly. But the market has improved from last year. You're feeling a little bit of that, although not many accounts are getting reductions in premium. And I would hope that we can have a good run in terms of storms and losses, and that we get back to the kind of trend that we experienced back then. And Curtis is right. Two of these carriers have been with you for a long time. They paid very quickly after Ida. They did spend, I don't know, probably $100,000 or $200,000 on adjuster to come here and visit your worst sites. They really didn't have to do that, frankly. We all knew what it was. They could have cut checks and walked away. But I think, and I would hope your FEMA representative would support the fact that that lengthy report he did was helpful in documenting a lot of the damage, so they could start. The other thing, you're talking about self-insurance and stuff. Lots of people are looking at that. They're looking at bigger deductibles, et cetera. And I don't know, you didn't use the terminology captive insurance company, but in my mind, I'm kind of hearing that's what you're thinking about. And you can certainly do that, and it requires, like any other company, to capitalize that insurance company with money, right? And I don't know that you're in the business or want to be in the business of insurance, but you would have to fund that, and it would cost you some expenses to set up such an insurance company. But those are things I have explored. And one last comment, the one, Lloyd's, that has the biggest piece of this, I was in Lloyd's about 4 weeks ago and sat with the underwriter, and really good person and very committed to staying on this account. And I think the pricing that you got kind of showed that, because again, we're not seeing much in the way of decreases right now. So,
I see increases.
yeah, still increases. Anyway, just wanted to add that. Thank you.
Okay, to wrap this up, I do want to say that, you know, I don't discount the value of having insurance, but I'm just making sure we're being thorough and we're getting justification for, you know, we represent the people of Terrebonne Parish and the taxpayers' money that is coming forth to us. So I just want to be thorough, and although I don't doubt that, you know, anybody would want to be an underwriter for us, I mean, you're getting $1 million a year from us, and we're rolling the dice, and they're rolling the dice too. So I get that. I'm just making sure we're doing our due diligence and representing the people of this district. So we have a motion on the table. Have a second. Any objections? Hearing none, so ordered. Item number 4, consideration of approval for authorization to advertise for requests for proposals for fiscal agent banking services. Let me go ahead and read it, yeah. The committee recommends that the board approve and authorize the purchasing department to advertise for requests for proposals for fiscal agent banking services. Ms. Breaux, you had something?
Just to let everyone know that we have been with Regions Bank for some time. We've reached the end of the allowed extensions for their contract, and so it's time to go out again for proposals to see what banking services we can get in our area.
Any public comment?
Wait, you didn't get a second. You got, yes.
He moved. Mr. Crowder moved. Dr. Cluche, you have any questions? No comment. Mr. Crowder? Just one question. With regards to the requirements, similar to what we have for our media of record, do they require to have branches available, actual physical branches for this banking services?
The requirement is that they are large enough to collateralize all of our deposits. We're not FDIC insured like you would be personally, so the banks have to be large enough and have enough capital to collateralize our deposits to make sure that they're safe. But in doing the request for proposals, we insert requirements into it that we would like to see, and one of them is physical bank branches. One of the reasons that we chose Regions the last time we did this is that the number of branches matters to us. We're geographically so large, and our schools have to go to the bank every day. And so the bank who has a lot of branches available in our area, that makes it easier for our schools to be able to make their deposits every day like they're required to without having a lot of travel, is somebody that that's very important to us. So that's one of the things that we'll be looking at. Of course, we look at fees, what does it cost, what interest rates do they pay, and a whole list of other things. But the branches it's important to us because of the schools.
So, just one more question. Aren't there schools that have their own bank of choice that each administration decides on, or is this?
They must use our fiscal agent. So Regions Bank teamed up with South Louisiana Bank in their last proposal, which increase the number of branches that were available to us. And so at that point, South Louisiana Bank is not large enough and does not have enough capital to collateralize our main accounts, the general fund and the sales tax and those main accounts that we hold here, but they can handle collateralizing the school accounts. And so in that case, yes, the schools were able to choose only between South Louisiana Bank and Regions Bank, by which branch was located most conveniently to their school or maybe on their way home where they could stop on the way, but we let them choose, yes.
Okay, thank you. Yes, sir.
I'm sorry. So with this, when we put out other bids, we're required by state law to accept the lowest bid. Does that apply to this as well?
No, sir, it doesn't, because it's a request for proposals as opposed to a request for bids.
Gotcha.
So a request for proposals allows you to evaluate on a lot of other criteria besides just cost or
Right.
price.
Okay, great.
Any other questions? Any objections? Hearing none, so ordered. Item number 5, consideration of approval to amend the master contract for professional services with All South Consulting Engineers, LLC, for grants management services. The committee recommends that the board approve and accept the amended master contract for professional services with All South Consulting Engineers, LLC, for grant management services to extend the contract from May 5th, 2024 through June 30th, 2027, or until final closeout of Hurricane Ida projects with FEMA and/or Governor's Office of Homeland Security and Emergency Preparedness, GOSEP, adjust the required fee cap not to exceed the allowed 5% of total FEMA obligated projects for Hurricane Ida. All other terms and conditions remain the same. Funds to be derived from the FEMA reimbursement funds. Moved by Mr. Crowdis, seconded by Dr. Kuche. Public comment? Ms. Bro?
Just to add that we are allowed to just continue renewing this same contract through the end of the disaster so that we have continuity with our FEMA grants manager.
Mr. Crowdis? Dr. Kuche? No, sir. So just to be clear, because it was brought to my attention, this isn't changing any of the terms. We're just extending the time, and this is the same terms that we had before, and this is just hoping to get us through the remaining projects, correct?
Yes, sir, that's
Okay,
correct.
thank you.
Mr. Ford,
Yes, Mr. Ojo?
is that is that it?
Mhm.
Oh, so I just want to thank All South for all they do. Adam, being in-house, that's tremendous. Stevie, your support as well. So we appreciate so much what you're doing. And I was asked today at lunch, how's it going as far as FEMA reimbursement, like at a little talk I was giving. And I was maybe expecting the worst, but it seems as though it's going okay. It's obviously going to be slow, but I feel we're making adequate progress and timely enough. So, and that's due to the work they're doing on that grant management. So thank you, guys.
Thank you. Any other board members? Mr. Dior?
I'd like to make a comment to Mr. Stevie Smith. You're very fortunate to have that young man working for you. He's doing a great job.
Anyone else? Any objections? Hearing none, so moved. Number 6, consideration of approval of original budgets for 2023-2024 fiscal year. Ms. Bro, the committee recommends that the board approve the attached original budgets for the disaster fund and the building fund for 2023-2024 fiscal year. Moved by Mr. Crowdis. Second. Second by Dr. Cluche. Any public comment? Ms. Bro, did you have something you wanted to say on this? No, it's included in our packet, the dollar amounts. Do you have any questions, Mr. Crowdis? Dr. Puche? Anyone else? Any objections? Hearing none, so moved. Number 7, consideration of approval for a one-time salary supplement for the fiscal year 2023-2024 fiscal year. a bit redundant. The committee recommends that the board approve and accept a one-time salary supplement for fiscal year 2023-2024 in the amount of 5% of each employee's base salary for all full-time employees and all regularly scheduled 20 hours per week part-time employees employed as of May 1st, 2024, prorated for those employees with an employment date on or after January 3rd, 2024. Funds to be derived from the American Rescue Plan Act, ESSER 3 fund, payable in May 2024. Moved by Mr. Crowdis, second by Dr. Cloche. Any public comment?
I ain't making the same mistake.
Mr. Ogeron, did you want to go over this at all? or-
No, sir. It's, again, you can see at the very last line, it's American Rescue Plan Act money, so it's not going to come out of general fund. It's something that's done with multiple school districts throughout Louisiana, so we have it, and we'd like to do that.
And I'm excited that we're gonna do this for our employees, for everyone, and I think that it's well-deserved, and it'll definitely help them out towards the end of the year.
Well, I'd just like to make a comment. I'm glad we're doing all full-time employees and the 20-hour, part-time. So I'm glad everybody's included, best we can. Thank you.
Any
Thank
other
you.
board members? Any objections? Hearing none, so moved. Item number 8, matter bearing upon monthly budget to actual comparison report and monthly sales tax collection, whereas collections for the month of January 2024 are a decrease of 3.59% compared to January 2023. This is an informational item only. Ms. Klingman, did you have anything to add to that? Nope. Okay. There being no further business before the Finance Section 16 Lands Committee, I turn the meeting over to Dr. Tron. Thank you.
Thank you, Mr. Ford. Our next committee will be the Executive Committee, as soon as our secretary is ready.